Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Craig Erlam, Senior Market Analyst at Oanda. And we're going to look at, as always, an exciting currency pair, dollar-yen. We've seen a bit of a flattening of the yield curve of late, and that's kind of weakened over recent sessions, the dollar-yen. A lot going on the chart. It has felt range-bound, though, certainly for most of this year. Are we going to break this range? What are the charts telling us?
My inkling is that we are. I've not hidden from the fact that I see the dollar being more positive towards the end of the year. Now we're going to see areas of weakness throughout that. We are seeing it run into resistance around that 114, 140.50 zone. This isn't the first time that's happened, so it shouldn't come as a surprise to anyone. I think really what we're looking at now is that 114, 114.50 to the upside and 113 to the downside. 113 was resistance on the way up, and it was also support when we had that brief correction a couple of weeks ago. But you can see the thing that concerns me to the upside right now is the number of long upper wicks on the candles. When we're talking purely technical here, I can see at least half a dozen candles here where the pair's rallied into those 114, 114.50 zones, and it's been rejected and closed much lower, creating these long upper wicks. That isn't what we want to see if we're particularly bullish this pair. The alternative view on that is that we also haven't had a rotation lower off the back of it yet. A break below 113 would create a nice double top from the trading over the course of the last 3 weeks or so. So that could be a bearish signal for us down into, say, the 112s, 111.50s. But a failure to do that means we're just continuing to make higher highs. So while we are seeing this clear resistance currently around the kind of 114.50 zones, if we continue to make higher highs from below, higher lows from below, sorry, then that is a signal that the buyers are feeling more and more optimistic. And often in that case, when that does happen, if you're continuing to sell at these 114.50s, that's going to make you increasingly nervous. So you wonder whether that level's going to break. And if it does break, then it could be quite an aggressive break. So it seems that it'll have been one that's been building for some time. Now, again, I'm not here to just necessarily just forecast where the charts are going to go. You've got to pay attention to how they trade. But at the moment, I would suggest that this is still looking bullish despite the number of rejections on the candles. And only a break of 113 will make me think otherwise.
Understood. And if viewers aren't necessarily trading dollar-yen at the moment, but they're looking at it and they need to set levels because it has been fairly range bound for a lot of the year. What key levels would you look at on both the downside and the upside? Where would you be looking?
Well, like I say, 113 is the one big one below right now. So we're at 113.85, so there's still a little bit away from that. But I think the break of 113 is the signal that we are seeing another correction, and that takes us back towards the kind of 112s to 111.50s, which roughly coincides as well with that combination of moving averages and also the previous low as well. So that would be a notable level from below. A break above 114.50 or through that little zone of resistance that we've now got, that would be quite a bullish signal in the longer term. That would suggest we're going to see, we could potentially see a much more bullish move to the upside. Now, initially, but don't be surprised if we see it hold around the 115, 115.50s. The reason I say this is because when we go back right to the start of the year, that was a notable zone of resistance as well, even if it's not one we've managed to attain since then. But even going way beyond that as well, that was a notable zone of support as well previously. So don't be surprised if we do run into near-term resistance on there. But for me, at least, a break through the 114.50s is a bullish sign in the interim. So while it could hold around there, I think the damage effectively has been done, and that could be a bullish signal for the end of the year.
Fantastic. So lots of target prices there for our viewers. In the meantime, Craig, thanks for joining us today.
Thank you.